Hi, this is James Shug with Westpac London's end of day report for Thursday, July the 26th. Well, the big news today was Mario Draghi, the ECB chief, speaking in London, saying that the ECB was ready to do whatever it takes to save the euro. And believe me, it will be enough. To quote him again, is what he said. He's basically arguing that high sovereign bond yields within the Eurozone, if they impair the transmission of monetary policy, it is within the ECB's mandate to act to correct that situation. So this actually contrasts with what he said just 2 months ago, when he said that the bank's strong preference is that Greece stays within the euro, but the ECB will continue to comply with the mandate of keeping price stability over the medium term in line with the treaty, blah, blah, blah. And because there's no provision within the treaty for a member leaving the euro, there was nothing the ECB could do about it. But now what he's saying is, with Spain and Italy in the gun sights, it might be appropriate for the ECB to do what it can to prevent further market breakdown. So let's see if those words are followed up with action. Certainly price action today has responded, with the Spanish stock market up 6% today, the Italian market up 5.6%, Spanish 10-year bond yields are at 6.8%. They were at 7.6% a day or two ago. So there's certainly been a significant reaction to those comments. But as I say, we will need to see some action. So whether or not it's going to be announced at next week's ECB meeting, or whether we'll just suddenly be aware that the ECB's out there buying bonds again, I'm not sure, but certainly markets will be watching for that very closely. The other news items today, we saw a fall of 1.4% in pending sales of existing homes in the US. So another slightly softer housing number out of the US. Durable goods orders in America, they were up 1.6% in June, supported by aircraft, but the core capital goods component was down almost 1.5%. We saw a 35,000 fall in initial jobless claims in the latest week, but these are July figures. In July, the weekly data are up and down like that because of difficulty seasonally adjusting at a time when there's variable length shutdowns of auto plants for new model retooling. So we don't really focus on the figures too much in the month of July. In the Kansas City Fed Factory Index, it rose from 3 to 5 in June, recovering a bit of its drop from back in, that was in July, recovering a bit of its June drop, but not all of it. In Europe, we saw money supply growth, M3 money supply, edge up to 3.2% annual growth rate, but lending to households and businesses decelerated further to minus 0.2% annual pace. So further evidence there that the banking system, the banks aren't particularly willing to lend, and the demand for credit isn't particularly strong in Europe, which is after all in recession. The other main economic stories today, the big one of course, ECB Draghi's comments. I've already mentioned the Spanish and Italian stock markets, but just to wrap that up, the London market up 1.4% today, the French market up 4.1%, and the Germans up 2.75%. And at 6 p.m. in London, we've got the Dow up 1.3%, the broader S&P's up 1.2%, and the Nasdaq up 1% today. In the commodity markets, gold's up 0.25% at $1,616 an ounce. Oil's also up 0.25% at $89.21 a barrel, and copper's up 0.4% today. The Aussie dollar, it rose almost a cent on those Draghi comments, and it's at 1.039 against the US dollar at the moment. Okay, back tomorrow with details of the latest quarterly GDP numbers out of the US and revisions to recent history, which, if recent history is any guide, should be to the downside. Okay, back tomorrow.